Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thanks so much for making time today.
Good afternoon, Devin.
Well, Professor, stocks were mixed overnight on Wall Street. Investors relieved it's not another total rout, but tech stocks did take a hit of more than 2%. Everyone wondering what the Fed will do next month. Some are saying now at this point the market could actually be reassured by a bigger rate hike. What's the story in the global markets?
Well, as you said, Devin, U.S. markets were mixed on Tuesday between Dow Jones and NASDAQ. Dow Jones gained on 0.2%, but NASDAQ fell 2.4% as investors ditching shares of companies that rallied during the pandemic. Particularly, social media company Snap stock retreated 43% in a single day. The company issued a profit warning Monday and said it planned to slow hiring and spending. Other tech stocks were affected by this Snap's huge decline on yesterday. The NASDAQ down 28% so far this year, and it has been hit harder than other major U.S. indexes. For example, the broad-based S&P 500, by comparison, is down 17% from the beginning of this year. Today, Nikkei dropped 0.3%, while Chinese market moved up. Shanghai index gained 1.3%, and Hang Seng also gained 0.6% as 3 p.m. in local time.
Well, Korean stocks were a little higher today. They're doing better than those indice numbers you mentioned for the U.S. In fact, a little shaky early in the morning, but both indices here closing with decent gains. Perhaps also relief that Wall Street's not down so much this week. Minutes are due out from the most recent Fed meeting. People are watching that, and the exchange rate's coming down too. Tell us about the domestic market.
Today, the benchmark Kospi added 0.4% after yesterday's drop by 1.6%. Coal stock also gained 0.9% today. Domestic markets are actually moving without clear direction recently. The volatility increased by switching between positive and negative returns almost every day. And the trading volume also declined by 30% on a daily basis compared to that of last year. This unstable market is expected to be continued until U.S. and Korea's key interest rates are finally decided around early next year. However, large cap stocks are mixed today. Samsung Electronics dropped 0.2%, and the second largest cap, LG Energy Solution, also dropped 2.7% today. But Samsung Bio gained 2.8%, and Kakao also gained 1.5% today. In investor group-wise, institutional investors led Kospi market rise with 513 billion won net purchase.
Well, Professor, if we could talk about inflation for a minute. The expected inflation number among consumers now is at a 10-year high. They expect prices to rise over the next year by 3.3%. Interestingly, that's actually lower than the actual inflation we've been seeing lately, which is over 4%. Is that an indication that inflation could come down, or is this a figure we'd expect to lag real prices in some way? Tell us about that.
A simple and clear implication of surging expected inflation is that the inflation goes on even though current inflation factors like oil price rise and war in Ukraine disappears. Consumers expected inflation hit the highest level in 9 years as oil and commodity prices are rising at a fast pace. Consumers in May expected the inflation to grow 3.3%, up from previous month's forecast of 3.1% rise, according to Bank of Korea. This marked the highest level since April 2013, when the figure rose to 3.1%. The recent lifting of almost all pandemic-related social distancing rules is also feared to add upward inflation pressure by encouraging people to increase spending. Since Korean government is expected to provide cash support on coronavirus hit small businesses, which also raises the price level further, Bank of Korea is expected to hike its key interest rate faster.
Right, and speaking of that, the Bank of Korea's Monetary Policy Board is meeting tomorrow to decide on interest rates. The first board meeting since the BOK's new governor, Lee Chang-yong, took office and generally agreed that rates will go up. The concern, as ever, though, is what this means for households whose debt's been growing fast. What can we expect to come out of the BOK meeting?
Almost all market participants, like more than 90% of bond traders in Korean bond market, expect the Bank of Korea will raise its key interest rate this week, actually tomorrow, to combat inflation and align with monetary tightening in major economies like U.S. and EU. So if Bank of Korea's key interest rate by 0.25% tomorrow, which is highly expected, the key interest rate in Korea will be 1.75%. Bank of Korea is raising its key interest rate from last year by 0.25% in almost every monetary policy meeting. Korea is grappling with rising inflation, as we talked about, pressure driven by soaring oil price and the war in Ukraine. Korean consumer inflation spiked 4.8% on year in April, the fastest gain in more than 13 years. As you said, that Bank of Korea Governor Mr. Lee recently said he did not rule out the possibility of a big step or 0.5% point key interest rate rise in the future.
We'll have to see what happens tomorrow and check in again with you soon, Professor. We'll leave it there for today, though. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you for having me today.